Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 15th of September, Friday, quadruple witching day. We are going to review the charts in detail because today is a nasty day. But we are going to try to find some kind of reasoning behind the data today. Today we got New York Empire State Manufacturing Index for September. And I think this is one of the reasons why markets are really selling off today. We were expecting minus 12, minus 10, and we got basically big increase. 1.9. This is not good. From the minus 19 to the minus 10 expected, 1.9 is basically not good because it shows signs that manufacturing is really pushing higher, and this is not what you want when you are beating inflation. You want supply, you want demand to really cool down. That's one of the things I think it was causing the market to start leaning towards the downside. And also we got industrial production also on the positive, less than the previous one but higher than the previous one on year over year, and it still shows the same kind of thing of manufacturing production, manufacturing production. And then we got minus 6 flat from the previous one and 0.1 as expected. So nothing is showing signs of cooling down on the manufacturing, on the production, on either thing. And then we got the final nail of the coffin. We have the consumer sentiment preliminary way lower. So if you think that we can avoid recession and at the same time beat inflation, I mean, this is not the kind of data that you want really. The only good data is inflation expectations that went down from the 3.5%, and the 5-year expectations also went down. But apart from that, I think this was bad, and this was bad. So what do we got? Before moving to the charts, remember that today it's quadruple witching day. So basically, as you can see, we are right now at 445 on the SPY, and the max pain is 452. We are dealing between these two levels, and it's really interesting how we are going directly to the downside, and it's possible to just do a big reversal right now. We need to check the charts and we need to see correlations in other markets to really try to think about that. This is a Nasdaq 30-minute chart. As always, I was looking to this pivot that yesterday we were holding up, and in pre-market we were holding up. Then this happens. 15,650 was the big level in which we started to see really not progressing. We started moving down and we were just following the 45 EMA towards this. And this was the trap. It's not only the opening range not even touched 15,630. But look at the 30-minute. This is this was really brutal. I had some kind of support from yesterday from these kind of wicks at 15,580. Look at this. This is huge. One time framing to the downside. Huge sell-off. I had another support down here that we tested yesterday. It was prior low. We went down, we reversed it, and we rejected, and we continue lower. That's why sometimes you hear that don't try to catch the bottom on a one-time framing market. Today was a really nasty sell-off, plenty of selling pressure. I I I I don't have any more support. This is the only one that I had left that we tested here, and we are now retested from the downside, 15,460. Right now, the Nasdaq it's 1.34%, and it was 1.38. We are trying to bounce. I think this is just short covering. Talking about the V reversal, I don't think this is happening because on the SPY that would entail to basically break this high of days and then more for 550. 550 is up here. So I don't think the V reversal is happening. Anything can happen, but the probabilities on a Friday afternoon, the only thing is that it's quadruple witching day, and you have to. I've seen things that those are crazy. So if market makers can do a V reversal like this, that took the Nasdaq down since the open for 215 points, and they can reverse this, it's today, quadruple witching day. But let me tell you, if you are trading for the afternoon on a Friday on a quadruple witching day, betting for a huge V reversal, I don't think you are really in the green, because if you have profits, you are just calling it a day. And I think that's one of the things that you should be doing. Other things that I've seen that are from the big tech companies in the red, dollar, it's not super bullish. It's just consolidating, but after yesterday's push, we are still in good shape. 105, this resistance, 105.6 to 105.8, it's on the table, it's right there, and it's just a correlation with the stock market selling off. Yesterday was a divergence. I called that this morning, and we were in a really critical spot in the Nasdaq with this down trend descending resistance that we are now heading with a huge day down 1.41. We got Apple also in the support that we are not pushing higher. We have Microsoft in the middle of nowhere. We have Tesla trying to reach the gap, but Amazon was in a really good shape to really beat the August 2022 level, but it's not possible. Google is just flying around right below the April 2022 levels. Nvidia is continuing selling off, entering the gap, and Meta 2.88. So really bad day for the tech companies, but yields are continuing higher, and this is the most concerning thing of everything. So we have still this compression, and I think this is the 2-year yield at right now at 5%. If we start moving higher towards 5.2, that is June 2006 level, 17 years ago. I mean, this is not good. They are in the green, the yields. The 10-year is also in the green. It's pushing, squeezing this bearish candle that we got. And we are in the same situation. We have an ascending wedge and towards 4.3%. So insane yields, insane strength. And it was a matter of time for the Nasdaq to do this kind of day. It was really insane, the selling pressure today. But look at these, banks are in the red. Not even one single sector fund it's in the green. Everything is in the red. Everything. And small caps in the red, Bitcoin in the red. I mean, the only thing that I think it's worth mentioning is that gold that hates interest rates, but more than ever, I think it's being used as a refuge from all these things, apart from cash into the dollar. I think this kind of demand for gold futures, look at this huge move. We tried to go higher and we couldn't reach 2000, but either way, 0.71% in the green, where when all the other markets are in the red, it's worth mentioning. And let me tell you, crude oil, it's looking pretty nice, pretty nice, or an opportunity to do this. Last thing I would like to mention, let's not forget about crude oil. Crude oil is not having a big day, but still in the red, 0.60. And look at this move. Look at this huge move. From bottom to top, it's at 2% from the sell-off at the open. So it's worth mentioning because we are at insane levels of crude oil, 90.67. One of my levels was 90 and my other level is 93. And let me tell you, I think we are going to consolidate and then try to reclaim 93. And this is not going to be good for our gas prices. So last thing, talking about the sector funds, let's do a quick review of the sector funds performance, because I think it's worth mentioning that the 5-day performance, look at what we have up here. We have utilities, defensive sector. We have consumer discretionary up here due to Tesla. We have financials, we have communications, and then we have another two sector funds, defensive sector funds. So in the last 5 days, we are seeing a mix of defensive and defensive with more or less, I think this is quite hawkish, quite bullish, and this is quite bullish. Communications is there. And look at where is technology. Technology, it's really in a phase of outflows. And let me tell you, there's a lot of push towards utilities. Watch out if staples and healthcare rotation also takes place, because for next week, it's quite concerning ahead of the interest rate decision to really see utilities and some defensive sectors up here and technology basically being destroyed. So watch out for that. Don't forget about these kind of things, because other markets might tell you a story that is really different from your typical big tech stock. So in summary, fundamental data was not good, and we already started seeing signs of weakness when we basically tried to go higher, we couldn't, and we started entering again value from yesterday. This was value from yesterday, and even in pre-market was down here, and we were already out of value and out of range of yesterday. So this was a big capitulation to the downside. So big capitulation with correlation with dollar and yields. And I mean, financials are destroyed. Not even one single sector fund, it's in the green. And the only good things is crude oil is slowing down, but still look at this huge push. And gold, I think, is being bought up, because apart from the dollar, I think people is going crazy for metals and gold because there's a lot of fear on the market. So I hope you had a decent trading day. I hope you didn't ruin your day today. It was a really difficult day, quadruple witching day, with some 4.5 million options expirations. And I think it was really tricky because I was expecting some kind of setup to really break out, but the fundamental data really, I think it was a reality check for the market. And it's not completely destroyed because we still have this kind of support, perhaps a bounce down here for next week. And but this was really a clear rejection. So we have one tap, two taps, and three taps. So we have to see if the trend line supports for next week. But either way, the weekly, I'm going to review that in the weekend recap, weekly recap tomorrow or on Sunday. Don't miss that because those are really complete and really interesting. But this weekly candle with this ascending support, I don't know, guys. We have to really pay attention to for other things and to really see data coming, because today's data was really not good. So that's all from my side. As always, thank you for your time. If you found this video useful, as always, give it a like, subscribe to the channel. Thank you for the subscribers. Thank you for the comments. I hope you are liking these kind of videos, really interesting videos that I try in every video to teach you something, to show you the kind of markets that are correlating or diverging from your usual tech stocks, because that provides you with an edge, with an opportunity to really understand these markets. So thank you for your time. Remember that I upload videos every single day. Today is Friday. This weekend, don't miss the weekly recap video, because those are really awesome. I put a lot of effort in those, and I will review all the data and all the technicals from this week that though I think are really interesting this week. So remember that discipline and risk management are key for success. Today it's one big example of why risk management is useful, because if you didn't stop out in the down move and you were long, I mean, you completely blow up. So stay safe, everyone. Have a nice weekend. See you on Monday, but don't miss the weekly recap tomorrow. So have a nice day.